All right, what's up, everybody? Welcome to LV Home Experts, the Las Vegas real estate podcast. So on today's episode, we're going to be talking about how the Governor Sisolak came on out a couple days ago and talked about the coronavirus and what's going on and how this is going to impact the Las Vegas housing market. So in studio today, we have the man, the myth, the legend, Brett Jenny. What's going on, my man?
What's happening, Chakits?
How's everything going with you?
Good, man. Good.
Everything's good?
It's going well.
What have you been up to lately?
Selling homes and trading stocks.
Oh, yeah. I got my co-host, Dan French with Guaranteed Rate. What up, my man?
What's up, guys? How y'all doing out there?
Dan the man.
Dan the man. Trying to be.
Trying to be. You are the man. Stop acting like that, bro.
Oh, we got to humble ourselves a little.
Don't be clowning like that.
Yeah, no. This guy makes a lot of money. He playing games. Come on, bro.
What's going on with you today, Chuck?
You know what? We did a couple things today. Me and Rudy. We went out. We did some filming for some clients.
That's good.
We did a property right up here in McDonough Highlands, 1.5 million.
Nice.
So we'll see how that turns out. And we're here in studio, man.
And you got somebody to meet up right after this too, huh? You're a busy guy.
Well, we got a couple things that we got to finalize, and after that, we have a 4 o'clock appointment for a video tour for a client, one of our clients actually.
Cool.
A lot of people are starting to buy homes this way now, as far as out-of-state buyers. We do a full video tour to the property.
Yeah.
We do it two ways. We can definitely do a video and send you the video, but a lot of people do prefer to do it through, FaceTime. That is the best way to do it.
Yeah, I think Thanksgiving right now, everybody's probably getting in that mode.
Yeah.
I'm doing that on Friday.
Yeah.
For one of our clients.
Yeah. It's kind of crazy. November and December, things start to slow down as far as like buyers going out and buying. But what I can tell you is that the best time of the year to buy homes are during November and December. I closed out my home in December, and I was able to negotiate a better deal. And here's why. If you're working with builders, right, they're trying to liquidate their properties to make the numbers for the next year.
Oh, that's right. So are they just kind of giving away some of these properties?
Well, they're not giving them away, but they're willing to budge, especially like the standing inventory. Also, depending on what's going on with the market. I mean, right now, I literally was speaking to Joey today, and he had a client. I think they offered $650 on a home, but they were willing to go up $15,000 above the appraisal price. But another buyer was willing to go up like $45,000 on that price.
That crazy?
Yeah.
For the buyer we got in contract a couple of weeks ago, we had to go 10 above.
Isn't that crazy of what is going on in today's
and that was in the 600 price point.
So that tells you it's a seller's market then, right?
Yes, it is a seller's market. So the good news is on the resale, right? Think about this. The people that have to sell they need to sell, right?
Yeah.
The guys that want to buy a home, they're going to be in a better position because now you're not going to have that many people competing. But first of the year come around, starts the game all over. You see what I'm saying?
So many of our buyers that basically say, hey, first of the year, they've been putting off for the last 2 or 3 months. They're literally all waiting.
Yeah, they're gonna have a tough time.
It's gonna be a rush. Yeah.
Well, what I see is you're gonna have a high fluctuation of people just come into the marketplace to start to look at some homes.
Yeah, but what happens if COVID hits, like you said?
Okay, and that's what I want to get to because a couple weeks ago, the governor came on out and talked about, hey, you know what? We got to get our act together because the numbers are increasing, right? Then what happened was apparently he got the coronavirus and he came out on Sunday and basically stated that, okay, certain businesses are going to run at a capacity from 50% down to 25%. The reason why I want to bring this on up is because how is this going to really impact the housing market? Because economics 101, money has to flow. Money has to move. So if you have jobs out there, right, like restaurants, right, these kind of companies out there, these small and pop shops, if they're running at 25% capacity, is that even enough money to keep the doors open?
No.
So now the question is, how does this impact our housing market? I mean, what are your guys' thoughts on this?
I think the retail sector and also the hospitality sector is going to be affected the most. I think there's a lot of people out there, though, because this has already happened, they're adapting to,
Yeah.
Maybe they're doing it a different way. Maybe they're just working out of their house.
I think personally, I think we're going to get another stimulus package. The vaccine's going to come out, and we're going to start re-going.
Now, forbearance ends at the end of the year. How does that impact the whole equation? You see what I'm saying? I mean, according to data, I think it was 250,000 people or something like that.
Yeah, it ticked up.
They can always extend it, can't they?
Yes, but I mean, here's the thing. Republicans and Democrats, they've been going back and forth. Stimulus package have not came back out yet. You know what I'm saying? We're still waiting. Mm-hmm. Right? So how does that impact the market?
Well, I think it's going to impact the market because people aren't going to be out there spending money, especially if they have to worry about trying to get into a place to live.
I think as long as Cali and New York keeps moving here like they do, it won't have any impact.
I mean, that's definitely a good point.
That makes up for a huge gap.
Unemployment, 15%. Mm-hmm. Here.
Big part of that, yeah.
So, I mean, we got to take a look at this whole equation. The average household income is only $51,000 here.
There was also a loss of a pretty substantial amount of census workers.
Yeah.
Because of the election.
Yeah.
They're no longer working. And that was a job that was obviously seasonal or part-time because, it's something that's just going on for that election. But I think there's a big high number for that too. So that's also going to contribute to unemployment.
Casinos. Certain casinos now are not operating from Monday through Thursday. That's also going to impact it.
I think there's could be very much realistically a gap in there.
Yeah.
But I think between a stimulus package being extended or a new one and the coronavirus coming out a vaccine coming out sooner than later.
Yeah.
I think that once that's announced and people start getting the vaccine, our economy is just going to skyrocket.
Are you guys going to take the that shot?
I don't know.
The vaccine?
I think what I'm going to do is I'm going to let people take it and see if there's any side effects.
That's a good idea.
Yeah.
The real side effects, you won't know right away, bud.
give it like 3-4 years to see what happens.
Who knows, man? I'm a firm believer that, unless I'm sticking straight lead in my body, we'd live. And
yeah, but what happens if it's like all of a sudden, you don't feel the same? Like you're going to work and you just don't feel like
I don't know, man. That's a realistic thing.
Yeah. I don't know. To me, I think it's kind of monitor this a little bit more. I'm not going to just be shooting needles in me.
Yeah. So the question is this market going to tank? What is your thoughts, Dan?
I think the market is definitely going to slow down, especially at the beginning part of the year. But I think when this vaccine comes out, if it does come out, I think it's going to stimulate the economy again, similar to what happened this year.
Yeah.
Same thing happened with COVID, where we started off strong. COVID came out.
Yeah.
We slowed down. How many buyers did we go through? And they were saying, hey, we're going to wait till the end of the year to buy.
Yeah.
Now, like right now, we're crushing it where we have a ton of people buying homes right now.
Yeah.
Last 2-3 months because there was consumer confidence and they see the vaccines coming. And also there was some stability with this, the coronavirus.
So wouldn't you add that on stability on even more if the vaccine actually does come out and there actually is another stimulus?
I think people need to see, though, that it works. And I also think that they need to see that the like you said, it's consumer confidence, right? A lot of it's people are. So
other than the obvious of stating this, of what could happen, I've seen no proof of it, though.
As far as
the housing market coming down.
No, I don't think it's going to collapse. I just think it's going to
not coming down, but slow. I see no signs of it.
Yeah, I think.
And I listen, there's obviously two indicators. There's seeing signs of it, and then there's actually seeing it happen. I don't see any signs of it, and I don't see it happening, obviously.
I mean, it's such a weird market. I mean, the Dow Jones, we broke 30,000.
Yeah.
Right? I was talking to you about.
This is just totally insane of what's going on. I feel like this is almost like an artificial market.
Yeah.
I feel like the Feds is really dumping money into the supply, and people are just taking this money and just spending money, keeping the
stimulus.
It's the stimulus keeping it going. But I mean, that's also going to be running out.
There's a lot of things. Right? There's a lot of things happening right now that go against the grain that have never happened. Because you're right. You think about unemployment. You think about coronavirus and all the fears and all those things, and everybody making a shift online and away from work and all that stuff. The stock market to be doing well is kind of an anomaly, let alone setting a record pace. And I was kind of talking to Dan about this before, which you have a lot of these young millennials and they trade using Robinhood stocks.
Yeah.
Or Robinhood app, and they trade different stocks using that. So why is the stock market going up? Because people are buying stocks.
Correct. Doesn't
make sense whether they should be or not. The old money would say no. In the old ways, it doesn't make sense. But as long as you have a willing and able buyers, which you have, it's just a whole different generation, a whole new scenario. It's very interesting.
I think the media, though, plays a big part in the psyche of people.
Yeah.
So regardless if anything does change with somebody personally, I think with seeing that this is slowing down, you're going to still have people come from out of state. They're going to buy homes. They're going to still use their money. But we're talking about people that potentially were going to buy, not the people that can buy because they're selling their house and that maybe they're working from home and they have something set up pretty nice. But the average person out there may now hold off just to see what's going to happen. I think that's what I'm looking at. Are we going to slow down? Probably not. A huge part.
But I've had a segment of those buyers for the past year.
Yeah.
They're going to hold on. Oh, we're going to wait and see. We're going to wait and see. I mean, those people tend to always wait.
And what happened though?
Unless their hand gets forced.
So what happened though? Then all of a sudden things started to look a little bit better.
One day their situation changed and something came to fruition or became realistic. So they're going to act on it.
Yeah. I mean, just like you said, though, like all of a sudden the restaurants started opening up. Now it's at 50% capacity. Now all of a sudden I'm getting those people that were in the beginning year saying, hey, you know what? Maybe it's time to buy now. Maybe it's let's talk about it. I just wanted to see what was going to happen.
Yeah.
I just think it's case by case.
I just think that as long as we have more of a demand than a supply, it's pretty simple.
So, I mean, we really don't even know what's going to happen. I mean, it's like almost Russian roulette because Sisolak did come out and said, look, if we don't get our act together and these numbers keep climbing, and he's going to give us 3 weeks now, he could be shutting this thing down, dude.
Yeah, and I'm not saying that it's going to hurt our housing sector right now, but I think if this goes into the next year, it could slow the housing market a little bit.
It definitely could freeze it because remember what happened was in March, it was more of an unknown, right?
Correct.
But if numbers keep rising, we can kind of go into that freeze.
I'll tell you what, too, and I make a lot of phone calls. I got people that work with me that make calls. A lot of people go to your website and they want information. I call them back. And a lot of them at that time were like, you know what? I want to get into something, right?
Yeah.
And then you call them back, the next time, and they're like, you know what? I'm going to hold off. Mm-hmm. That doesn't necessarily mean everybody's going to be that way, but I just go off of what people tell me and what I see, right? I just see that people, when in the beginning stages when this was going on, the people that were putting it off are now back in the market. But could this be another wave where same type of people next year, they're hold off. They're going to see what's going to happen at the end of 2021. So I don't know. I think it depends on what the media puts out. It depends on how quick the vaccine comes out, if there is one.
But there's still a greater segment that are moving here because taxes are cheaper. Homes are cheaper.
Those are very...
Those are good, valid points.
They are.
That's a lot more right now than your scenario.
Yeah,
and that's all I'm saying.
I get you. I think it's looking at the average consumer. I'm not saying California out there. Like I said, people that are coming from other states and stuff, not everybody's got homes that they're going to go. A lot of people we work with, they're just trying to transfer and call it a second home or try to come here and at least move here at some point, but they have their job still in California. So is that going to impact them? I don't know. Maybe it will. Maybe it holds them off from doing it. I'm not sure. We'll see what happens.
According to Sisolak, it says private gatherings must be limited to 10 people or fewer, right? 2 per household. So basically, it sounds like Thanksgiving is tomorrow, right? 2 families, is that what it is per household? So how does that work? And you always have to wear a mask. Just like right now, you guys are probably wondering why are we wearing a mask.
Some people on there, they're saying, they go, why are you wearing a mask right now?
Well, that's the reason why we are wearing a mask, because according to the rules, we are in a place of business. We got to play by the rules.
Take them masks off, Jesus, some guy just said.
All right. Hey, why don't you read some of these comments? Go ahead and read some of these comments here.
You want to read them?
Yeah, read some good ones, man.
They're talking about who should wear a mask, who shouldn't. Governor, should a refi right now?
Oh, that's a good question.
Absolutely, I would refi, especially with the stock market and the rates kind of ticking up.
Yeah.
I'd refinance before I wait. I'll tell you that, because we don't know what that market's going to do.
Oh, somebody made a point. Carlos, it says, I'll wait until rates go up and prices go down. Let's talk about that. If pricing does go down, but rates go up, how is that going to look? You still may be paying the same price.
Well, let me say, it's not about the price. I think what he's saying is,
I'm talking about monthly mortgage payment. You're still probably making the same.
I think, well, maybe I'm wrong, but I'm gonna kind of reference what I think he's talking about. I think he wants less competition. If rates go up, people are not going to be out in the market trying to buy
That's
homes.
a good point, yeah.
So I think what he's saying is, I'm going to wait, so less competition. I'm not going to be paying $10,000 or $15,000 above price.
Yeah.
That's what I think he's wanting to see. That way he has a little bit better choice.
Okay.
How long do you think until the rates go up?
I think they're going to go up next year, like I said, to probably the mid threes. Do I think they're going to go up to 4.5? I don't think the economy could sustain that, especially with us in the COVID. But
I think even mid threes are a little bit too high. I mean, people are kind of squawking. I mean, think about this. Average household income is only $51,000. That's already 8 times a house right now at an average price point across the valley, about $420,000.
Yeah.
And that's why you see high fluctuations of people that are from California and other cities are moving on out here, because they realize $400,000, that is nothing compared to the income that they're making.
No, but you still
have our income that's high, dude.
If you got a loan amount though of $400,000, you still have to pay that payment. So I'm hoping that either they're buying this as a second home or they're finding something here. If you're self-employed, you're in another state, you can't come here and say I'm going to be self-employed. You got to now put your time in here. Yeah. So a lot of people that are buying it. So you have to realize that yes, it's a lot cheaper. But what they're doing is they're putting a huge down payment and then having a lower loan amount. And that's how they're setting themselves up. If you sell your house for $800,000 and you put down, $600,000 and you have a $200,000 loan, that's $1,200 a month. You don't really have to do much to make $1,200 payment.
And what's crazy is I look at the NODs, the filings, and it's not even that high as far as notice of defaults. I'm going to pull that up here in just a second here on the screen.
Believe it or not, too, that forbearance, it's actually less than we thought, than we anticipated.
It's really not that much.
No.
I mean, right now, about 63% of people are actually buying homes. It was a lot higher during the Bush administration. I think it was like at 78.
Chakits, Carlos wants to know about property tax. What's your opinion on property tax?
I think property taxes here is pretty low.
It is.
Compared to other states.
It's one of the lowest in the entire country. It's about 1% of whatever your purchase price is.
I think what's also driving this market, guys, and I'll tell you with the consumer confidence, is as long as the rates stay this low, people know money's cheap and they're going to be out there buying.
Yeah.
The things that usually change the market is when rates go higher.
Yeah.
Once they see that, all of a sudden we see a huge drop. Why do we have such a, it's refinance boom year, right? Why is that? Rates are low. Why are people willing to pay above? Because they know they're getting into a payment with rates at, 2.5%, 3%. They're getting into a small payment. They're willing to do it because long term it's going to be cheap for them because they're getting a smaller payment than, let's say, if they waited a year or two.
Yeah. I mean, I have the data right here, so let's get right into this for the market report for Clark County for October 2020. You like that beat?
Yeah, remember that last
Dropping the beats before the news.
Last week we had a real good beat, didn't we?
All right,
Saturday.
Take a look at this. So if we take a look right now, so where's my mouse at? Lost my mouse. Here we go. So new homes, month of October, 265 in sales, resales 3,287. That's a lot of homes. We have a less than a month and a half supply. Short sales, we closed only 30 short sales. Deed of trust, 17 properties, right? And REOs, which stands for real estate owned. That means the bank had took the property back, listed with an agent, and sold it, 52. Look at this. NOD filings, only 108, right? Notice of sales, 31. That's nothing.
That's a regular market.
That is a regular market. So now, let me see here. Also, what's important, I want to take this to the map view. Okay, so let's take a look at this. High rises based upon zip codes. Look at this. High rise at 89158. Look at that. That's crazy, huh? Price per square foot, $800.
Where's that located?
Dude, some of them are selling for $800 a square.
This on the strip.
Wow.
Okay.
Wow.
Now let me go to another report here. I'm going to show you guys the zip code so that way you guys know what's going on. But let me see here. And quick sponsor, Clear Title. All right. Give me a second here. Let me find this report. This is important right here. Where you at? Okay, here we go. This is the most important page that we needed to be taking a look at here. Let's see if I can zoom this in.
By zip code.
That's right. So by zip code. So if we take a look here, this is closings in October by zip codes. So down the center here is the Las Vegas Strip. West side, east side, north side, and the south side.
Look at dude, 89144. That's mine. I'm up 9%.
Look at that. That's crazy, huh? In the summer, 9%.
Yeah, I'm up 9% mine, man.
But this is how it works.
I'd really like to not be in 89119.
Well, don't worry about that because that's going to end up going up because what's going to happen is how housing works is people will go out. They'll start off at a certain zip code, right? Because it's in high demand.
Mm-hmm. Yeah.
It gets too high to the point where I'm going to move to a different zip code because that's the next best thing. It's going to make its way all the way around.
That's why they hit my zip code because newer Summerlin is right next to me.
Correct.
And so prices got wherever it is, so now they're sticking to mine. So I'm still Summerlin, but I'm like 15 to 20-year-old homes.
Now, 89119, that location is going to be right next to like UNLV, Tropicana and all that.
That's already established though, right? So
it's already established. But if you look at the average price point out there, it's still high. Okay. Now, I live in a zip code of 89123. We are up at 4%. Let's take a look at the city of Henderson.
What would change that? If just maybe you don't. I don't want to interrupt you, but what would change to something like that at 89119? What would change where you got that trajectory of you have a negative percentage like that where it starts to go the other direction? Is
people buying more homes there?
Well, what about no? What if they put money into that area though?
Well, that's eventually what's going to happen.
Yeah.
It's going to fluctuate from one zip code into another. So what's going to happen is you'll have somebody go to Summerlin. They realize, hey, you know what? This is getting too high. We're overpaying. We're going to move on to a next zip code.
Right.
And we'll move on to a next zip code. It'll make its way all the way around.
I think because Vegas is growing out. It's always changing. So I think, maybe I'm wrong, but
You're definitely wrong.
maybe you put more money into that area.
You've never been more wrong.
Really?
Stick to the financing.
Well, let me ask you this, bro.
Yeah.
If you sat
Say that again, Brett.
Dummy.
No, he's not a dummy. He's actually really good at what he does.
He's super intelligent.
All right. So what were you saying, Dan?
No, I was just gonna say, like, you know how they're putting money into downtown.
Yeah.
What if they start putting money into that as well?
Well, that's eventually what's going to happen is because like investors, they're going to look at the market and see what areas are soft.
Right.
Right. So they're going to hit these areas. They're going to put money into it, and it's going to
100%.
increase the value. But again, let's just say you have 20 zip codes. You're always going to start off with the best zip codes.
Yeah.
Once you as a buyer, you can't afford it, what are you going to do?
Go to another zip code.
Okay. And then if you can't afford that, what are you going to do?
Go to another zip code.
You can't afford that, what are you going to do?
Keep going down in zip codes.
Exactly. That's how this process works until 8911 increases.
Yeah.
Everybody always shoots for the best and settles with what they get.
Yeah. Exactly.
You know?
So, going back, based upon what we're talking about right now, do you think the market is going to crash? Let us know in the comments below, or let us know what you think is going to happen to the market.
Hold on.
Let's get some questions in here, Brett. Come on.
Well, a bunch of more vaccines and if you're going to be required for it or not for work. So I'm not going to, and George Soros, I'm not going to touch
With
that.
Janet Yellen as Treasury, right? Secretary.
I don't see a rate increase.
What do you mean? You don't think she's going to,
Well, let me say this. The stock market has a lot of confidence in Janet Yellen.
No, they do.
They really do.
Keep pumping that money, son.
And if you have hedge fund investors and big investors that have confidence in the Treasury Secretary, then you're going to have somebody, because she's just got appointed to that, then you're going to probably have the stock market keep doing well because they have confidence in her.
Yeah.
So I think it's probably going to do well for the stock market.
Carlos says it's going to crash.
Okay, so Carlos, if you're saying it's going to crash, let us know, right? Why will it crash? Matter of fact, Carlos, call in the studio 702-319-1092, or if you don't want to call in, just go ahead and comment. What else we got on here, Brett?
Forbearance impact.
Oh, okay, we talked about the forbearance.
Yeah, I kind of talked about that.
So-
and then property tax.
Okay, so let's go back to this forbearance. Let's just say if we can't get an extension, then what? Then you're kind of screwed, right? Then you have the foreclosures. And here's the thing. to start that process.
I think the landlord or the owner is screwed because
exactly,
they got another 6 months even after they start the foreclosure process, usually before they get.
That is correct. So this could also prolong the whole situation. So sounds like what you're saying is that we probably won't even see this happen until another one more year.
Probably. Maybe the end of 2021.
Vaccine will be around long before that.
Well, by then it has nothing to do with the vaccine at this point. These are defaults where landlords can't make payments, right?
Yeah, I mean, and look.
And how many tenants out there are not making payments because, again, it goes back to 25% of capacity as far as occupants.
But you have to think about what is really the people out there that filed for forbearance, and we already talked about the fact that it's a very low number. Yeah. So even if every single one of those people just let their house go to foreclosure.
This guy on here goes, trying to predict the crash is like trying to predict Jesus' return.
and you know what? He's
we need to have him on the show.
That's absolutely right.
There's no way to predict this, but again, we're just having a discussion. Because at the end of the day, if you're going to be buying or selling, this is something that you need to be looking at.
These are compensating factors that you have to evaluate on both sides.
Yeah, we don't know which direction this thing is really going.
Correct. And I think when we're talking about the housing market as a whole, I mean, we all have our perspective. I'm sure everybody does their homework. There's the internet out there, and people can really look at these things. So, just like on one of these comments I see that says when rates go, the market's going to crash.
Look at this. We got some great comments here. It looks like it says delinquency is 19.2%. Shares delinquency 90 days at 14.2%. What is that? 10,000 is something? I don't see that. Loans. And it looks like 14.1% in September, and in August, 13%.
So
in July.
At the height of when we had 2006, 7, and 8, we were at 50%?
That I don't even remember.
Brett, do you remember that? Were we at 50%?
Oh, as far as foreclosures?
Yeah.
Oh, no, we were higher than that.
Dude, yeah. So I moved here in January of 2009, and there, on average at the time, was between 14 to 15,000 properties on the market, and I would say 13,000 out of the 14,000 were foreclosures.
Oh yeah, I remember it was 18,000 homes on the market.
Dude, I remember every house that I showed 7 days a week. Every house that I showed from my first 2 years in this town was vacant.
So you have to ask this question,
dude. It was crazy.
You have to ask the question: is the forbearance, even if every single property went to foreclosure, is it enough to shift the market? If it's 15%, probably not.
Yeah.
Well, I mean, and the banks didn't help themselves either because they flooded their own market.
Right.
And their attitude at the beginning of it was, we basically say to them, hey, listen, you should short sale them. But we did a lot of short sales, and they would go ahead.
I was going to just say that it's not only the people that are in forbearance. You have to understand our city, unemployment is at 15%.
No, I understand.
And that also trickles down. But my question to you is that you have to look at unemployment.
You do, but I think we were just talking about the forbearance side of it for the foreclosures.
No, I got you, but I just wanted to throw this in here.
No. I mean, I think if you look at unemployment, that's obviously something. But you have to think too, though. Some of those numbers of people that are unemployed are probably on the forbearance.
Yeah.
So there is probably a good percentage of people that are unemployed that are already in that mix of being on the forbearance, percentage that they're putting out.
Yeah.
So I don't know. I look at what's going on probably with the forbearance more than just the unemployment.
A guy on here said, I don't know about the market in Las Vegas, but here in LA, landlords and homeowners have so much equity that they will just cash it out rather than go for foreclosure.
Yeah, and that's a good point. There's options for refinancing right now where people never had before. We have the highest amount of equity in homes right now.
Mm-hmm.
And especially here in Vegas, I have a lot of people pulling money out, paying off debts, repositioning. A couple of people that I know refinance and skipping a couple of months for their payment.
Yeah.
And really just kind of taking advantage of a situation because they're lowering the rate. I don't know. To me, I think you're absolutely right, Brett. I think there's a good point to that.
All right. What else we got going on? Come on, Dan. I need you to keep talking here. I'm trying to type up some stuff.
Well, they're gonna lock down 2 Electric Avenue, and they're gonna take it higher.
Zach. Hey, didn't we have somebody say that last time too?
That's probably the same dude.
Hey, but he's got a good thing, man. That's a good saying.
Hey, man, he's got a motto. Let him stick to it.
All right, let's not read some funny comments here. Let's get some sort of serious questions here, man. What else we got here, Brett? Okay.
Vegas FHA mortgage delinquency.
You know anything about that? So
I don't.
Well, let me ask you this right now. How much, what's the numbers right now on refinancing, Dan?
Numbers as far as?
Like how many people are refinancing right now? Roughly.
For a percentage for me or for just in general? Like
what you're saying?
I would say, well, let's talk about my business. I would say it's about 60% right now.
60%?
Yeah.
That's a pretty high number.
Refi?
For refi.
Which that would make sense in today's economy based upon what is going on.
I think it's the rates. I also think it's the time of year. And I also think that a lot of times people, when it comes to Christmas time, they like to skip that month where they refinance. They're just using the equity and repositioning out of their house. Sometimes they're, changing programs, or sometimes they're just getting a lower rate. But I think a lot of people, it's intriguing to get a lower payment or get a lower rate, and then they're missing one or two payments, right? So
okay, according to the Market Watch, it says that 3.5 million homeowners right now are currently in forbearance.
Yeah.
I mean, that's still a lot, but how many of those numbers are reflected
that's across the country, though,
yes,
right?
That's across the country.
That's pretty low, man.
Let's see here.
I mean, I'm not saying it's not a huge number, but that's pretty low to be countrywide.
Well, let me just double check here. Let me just see this article.
I think, too, Brett, you got some other question? I look at your face.
No, I'm just trying to read them all.
What were you going to say, Dan?
No, I was just going to say that, when you look at refinance applications, those are up this week, and I'll go into that a little bit later, but people are obviously looking at this with rates and looking at the opportunity, and, it's just like, when you look at mortgage applications, we always look at, well, we're going to gauge to see what people are doing and what's out there. This is a week-by-week thing because of what goes on in the market and what the media really puts out, If they talk about rates going lower, all of a sudden, boom, everybody's refinancing their house, Obviously, it comes down to you as an individual, case by case. Like, is the timing right? Should I refinance? If I always tell people, you're in your home for 10 years, you might want to look at not refinancing or try to go into a 15-year fix, because now you're starting that whole algorithm over. So unless you're, pivoting, taking the money, putting it into, like I got somebody right now, they're taking the money out of the house, they're going to buy another investment home. Well, that might make sense.
Yeah.
But now, at least there's options, and I think that's what people are looking and intrigued by.
Now, it looks like, where was I here? On Chucky Lee, he was saying that he refinanced, took some money out, repositioned ourselves here in Southern California with a lot of equity. That's a pretty good situation. You know what I'm saying? Don't you think?
Yeah, because there's with the equity in the property, it provides options for people that maybe they didn't have 5 or 10 years ago. Especially with how fast, like you said, 7% increase this year. That's a lot of equity in 1 year.
Dan, what is the average HELOC rate nowadays? Any recommendations with banks for HELOC?
I don't know HELOC, I'll be honest. I don't really do a ton of HELOC. I know that they're going to be probably at least 8 to 15% because they're always higher.
Yeah, you might as well just refinance.
Here's the thing.
Cash out, man.
They're always higher because the bank looks at it as risk and profit. It's not a big profit to them to have a low loan like that. So they're going to try to charge a little bit higher rate so they can make a little bit more off that deal.
Somebody makes a good point. Do you guys realize how many people cannot afford to pay into their 401k? Millions and millions of people. Wow. Never thought of that. A lot of people are broke because isn't it like almost 90% of the population is living paycheck to paycheck? And that's something that we didn't even discuss.
Well, I also think too that, it depends on, is there a 2 household income, are they in a position, whoever this is, to, where they're not in a position that they're not unemployed.
Yeah.
Job security is big. And I think a lot of people, even though they might be making money, they're electing not to do that because the job security is now shaky because of what's going on.
Yeah.
So I would consider it, like, for instance, I can't get that money out, but yet you got all these things happening in the world right now. People are saying, well, maybe I'll just hold off for a few months and see what happens instead of just putting more money into it, because they might want to save as much as they can based upon what could happen.
Now, let's be optimistic here.
Yeah.
All right. So let's just talk about some good things here.
Okay.
Positives. What do we see positive coming out of this with the market?
I see stability long term. I do. I think that if we can weather the storm out of this, regardless of what happens, I think people are going to still come from California. I don't think that the market's ever going to collapse like it did and people think here, because there's too many people coming out of state that drive this market.
Okay.
We're not worried about people internally to try.
It's just a weird year.
Yeah.
In general, it's like a huge migration, and
that's a great point. Let's ask Brett. Same thing.
The amount of people that are coming here, it's so overwhelming that it just makes up for any common sense of why the market would go down.
Okay.
You know, you could have job loss, you could have whatever filed, but if you've got the demand coming through, we're lucky that it's a desirable place where people want to be. That's what we should be thankful for and happy for, you know?
Now, my perspective,
because they don't want to go to Cleveland, Ohio.
My perspective is that if we take a look at the migration pattern, a lot of people are moving from the coastal line because it's highly dense, it's highly populated, okay? Even though the income out there is really great, right? People are starting to retire. If you take a look at the demographics, the baby boomers, right? You have over 19,000 baby boomers retiring every single day. They want to get into a better climate, right? Like Las Vegas, right? They want to be more on the West Coast because here you can commute, right? Not only that, if they take a look at their income and what they can afford, and a lot of people are starting to downsize too as well as they get older in their years. So if you were in New York City, I don't know what the average is, let's just say 800,000, right? 400,000, you can literally get 1,800 square feet, 3 bedrooms, 2 bathrooms, 2-car garage. So again, migration patterns, that's a big compensating factor. Income level, compensating factors.
I think the migration is probably the number one thing here.
People that are retiring, they want to live in a place where they can be conveniently located, grocery shopping, stores, 24 hours. So that is the plus here. So coming into the new year, I think we're going to do just fine. I don't think the market is going to plummet or tank.
No.
Now, on the other hand, let's flip this thing around. Say the market's going to crash. Why is the market going to crash, Dan?
Well, I'm going to piggyback on what Carlos said earlier, in which I think he has a lot of validity behind what that is.
Yeah.
The real reason why this is all happening right now,
yeah,
like we talked about, is rates. I think the market would crash. It wouldn't crash. It would slow down. Because you have to think about, if rates go up 4 to 5%, right?
Yeah.
Let's just say if that happened on a $500,000 or $600,000 home, that loan size makes a huge impact on what people can afford.
Yeah.
And I think as rates go up, especially as these prices go up, we're going to talk about this a little bit later. The base loan amount for these homes are starting to go up even in 2021.
Yeah.
So what is that going to do? It's going to drive people away from this market.
Yeah.
And in markets in general,
still cheaper where they came from.
Yeah, but I think it's still going to slow down. It's going to slow down the pace, I think. It's not going to be, because look, you're right. They can come in and they could buy and put a lot of money down. But at some point,
can you go like this every day for the rest of your life? No. So
exactly.
But it's all relative to the gains that were made.
So if the market is going to crash, Brett, why would the market crash? Let's doom and gloom here.
Doom and gloom, which is the vaccine is a nightmare. It doesn't do what it's supposed to, or people don't want to take it. And the rate of increase for people that are dying from it increases significantly. And I guess...
See, here's what we have to look at, too, is markets.
Every business starts shutting down. I mean, I don't know.
Okay.
Well, I guess the main thing would be if people just quit moving here.
Well, that's
the thing. If they just stop moving here, that's going to...
And I want to get all your guys' point of views here, because we have to look at the pros and the cons, okay? So it can go either way. If interest rates goes higher, it does impact our housing, which slows everything down, okay? If people start losing jobs, they can't afford to buy homes. If you have too much people coming in from California, the locals can't buy homes. The coronavirus, that plays a big part with the vaccination.
I want to say this, though, too, and I want to say that in every market that we've been in, even if it's collapsed 7, 6, 7, and 8, it's always recovered. And why does it recover? Because
confidence.
You're absolutely right. Whatever sector happens to fail, whatever it is, you have a combination of things going on where the government steps in and they're like, okay, what needs to be corrected? For instance, we're printing a bunch of money, right?
Yeah.
And pumping it back into the system, just like this stimulus check and all these things that's going
on. You mean
on.
like deflating our dollar? Bitcoin. Anyways.
What were you saying, Dad?
I mean.
No, I get it. But I think it's more like no matter what market, people should be worried that the market will crash, but also they should understand that every market has recovered.
Yeah.
And it's because there's always a way, it seems like, that the government or somebody comes in to instill more confidence.
Yeah.
The reason why markets really slow down is because people start hoarding their money and not spending.
Humans have survived this long for a reason.
It's called velocity.
That's right.
I didn't even say it right. Velocity.
But
basically what that means is it's every time you take a dollar, how much of that dollar rotates around the economy.
Mm-hmm.
So if you have a velocity of 9, it tells you that dollar moved around 9 times that day.
Yeah.
And that's what it comes down to.
So I think what I'm trying to kind of go off of is I think even if the economy did collapse, which I don't think it would, I think it's going to slow down, it will always recover in some way, shape, or form.
Yeah.
Something happens, the government steps in, investors start to get confident. They start, just like, Brett's doing the stock market. Once the stock market, people start to get confident and they're starting to invest and spend their money. That's what these big investors are doing. We're doing it at a small scale. They're doing it at a large scale. But they're causing gross domestic product velocity, all these things for the economy to be stimulated and just people to spend money.
So for all the people that are out there are kind of sitting on the sidelines, not too sure if they should buy a home now, what would you say to those people?
I would say, what, like I tell everybody, if the timing is right, and you have all your ducks in a row, there's no such thing as the right. You got to be personally, you got to be in the right. But there's no like as a global or across the board. There's not like, hey, everybody jump in now. This is the time.
Yeah.
If you got to have a primary residence and you got to live somewhere, shoot, man, it could be tomorrow. It could be in a week. It could be in 2 years.
Yeah.
The reality is that if you buy a home, it's a tangible asset. It has the ability. You're not buying it to like play stocks. You're not buying it to get a return on investment. Could you get one? Yeah. But you're buying
worst case scenario, you have a place to live.
Right.
Now, I do want to correct you. You said it's a tangible asset. I believe it's tangible, but it's also a liability as well because you have to make payments to it. It doesn't bring you income unless it is an investment property. It is only an asset if you sell the property. So you are gambling. So I just wanted to clarify that.
But I would gamble that way versus going and doing it in other ways. I can think of many different ways where you can put money into something. I just think that if you're buying it to say that I'm going to buy it to get a return on investment.
Yeah.
Unless even buying an investment property, you've talked about it on your shows. You're doing it on a return on what you're getting for the rents. You're not doing it on, well, if I put money into this house, how much, if I sell it, how much can I get from it? That's not how you look at it.
Yeah.
Buying a house is another form or way for you to make.
And that's one of the issues now. A lot of consumers that do buy homes, they always want to wait until the market is rock bottom to buy a home. And the mindset nowadays, it's no longer about buying a home just to own a home. It's buying it because you're trying to time it.
Well, I've been in enough markets.
Yeah.
In 15 years, granted not 50, but 15.
50?
is
Damn, you look.
by the time you realize,
like
by the time ouch. By the time you realize the market's hit bottom, it's already going back up.
Yeah. No, you're absolutely right. And you can never time the market. I've made this
The
mistake.
best you can do is just go in the trend.
Yeah. I mean, I made this mistake, and I've told clients this all the time where, I had a duplex under contract. I had 2 houses with Dan under contract. I thought the market was going to collapse. I pulled out of the deal. And these homes now, I could have probably made another $500,000.
But you know what? Listen, you could have.
Yeah, could have.
But you know what?
You're young, dude.
There's
You're
other
just getting
things-
started.
Yeah, and there's
Tell
other
yourself
things.
that.
And I'm just making a point here. You can never
Yeah.
time the market.
Yeah.
There's just no way.
I've done that on plenty of things too.
Because now I'm sitting here thinking, should I buy some more investment properties? Am I at the peak? I don't know.
Well, like we talked about with the rates. Okay, let's say that it does slow the housing market.
Yeah.
Well, what's going to end up happening is we're going to go through a recession or regression a little bit.
Yeah.
Doesn't mean we're going to collapse, but people maybe will slow down. So what happens is those houses that we're selling for a premium are now going to have to drop their price to entice buyers to come in and buy their home. So if there's going to be a correction, it's going to be something along those lines of, maybe the coronavirus. We have it's uncontrollable.
I think it's going to be new homes correcting their price.
Potentially.
Yeah,
potentially. But I also think that, like you said, it's the rates, something like that. It's not going to collapse the market. It's just going to slow it, or it's going to change the market. So it's not these prices. I mean, California buyers and people in New York and all these, Chicago.
Yeah.
They're driving this market up. Yeah. Really. I mean, if you ask the person, or if you talk to somebody about the economy here, not too many people can afford a home. They can, but not afford a home that they're currently working here.
Yeah.
And now they're like, hey, I want to buy a $500,000 house.
Yeah.
True.
As it keeps going up, like I got somebody right now, they're adding another person and another person to try to get on the loan. I don't blame them, but they got to have a place to live. But that's what it's going to take sometimes, and that's where it's at.
Gotcha. So, guys, we're going to wrap up this show here shortly, and I want to get into the financing with Dan here. So, Dan, what is going on with the financing market?
So I'll kind of make this short and sweet here. So mortgage rates did tick up. They started up on Monday, and they've gone up a little bit. Now, when we talk about up, we're not talking about 1/8 of a point. That's a huge swing.
Yeah.
So we're talking about the cost, maybe closing costs, or just the cost in general for that rate.
Yeah.
Sometimes you go up 1/8 of a point to get a lender credit, but overall, it's not a huge difference as far as what rates are doing. It's relatively unchanged, but we did see that go up. Fannie Mae and Freddie Mac will also increase their loan limits to $548,250 next year. So
how much again? I'm sorry.
$548,250.
$548,250?
Yeah. Now that's big, because now people can now buy those homes.
And this is what, conventional?
Conventional. Fannie Mae, Freddie Mac. Now,
oh wow.
VA typically follows suit on these types of loan limit increases. So VA, I'm sure, is going to mirror what I just said. The other thing, though, is FHA, they wait to see what's going to happen. I'm sure they're going to increase their loan limit as well.
What is FHA right now?
Well, they haven't changed it, but right now it's $345,000 base loan amount.
Okay. So they're probably going to end up having to change that because of the way that the home pricing has increased. The average across the board, the median across the board is at 320. This is crazy.
It will go up. I mean, I can't foresee why it would not go up.
Yeah.
Going back to rates, a lot of the reason why rates went up is you see the stock market. You said it hit 30,000.
That's crazy, dude.
Yeah, and so usually when the stock market does well, the bond market doesn't do well, which means rates typically go up, and that's what's really happening right now. We're seeing an economy that's really thriving with the stock market. You look at the COVID-19 vaccine. Investors were optimistic about the vaccine, and so what does that mean? It just means that when you see investors out there with positive news like that, they're willing to invest their money, right?
Confidence.
It's when you have geopolitical news, things that you hear about that's negative, then they retract.
Yeah.
And so right now you're seeing a lot of positivity with the stimulus, with the COVID-19 vaccine. You also look at, we talked about home prices. We see the biggest spike in 6 years in September.
Yeah.
Prices keep going up, guys. The average housing home price is going up. I think it's up right now 6.2% from third quarter of last year.
Wow.
So we continue to see these things going up. And then investors, like I said, they cheered. A lot of confidence in Janet Yellen being appointed Treasury Secretary. I think what's going to happen is because of that reason, you're going to start to see a lot of investors. The stock market's doing well. You're in there all the time, Brett. So and he's seeing big swings, good gains, right? Mm-hmm. So I think because that she's appointed there, I don't think it's going to be the save all, but I do think it instills more confidence, and that's ultimately what we're talking about. What are these? The big investors are the ones that swing the market.
Yeah,
it's not us small people that are out there.
I said futures.
Exactly. I mean,
that's where the big boys play. You just got to see where they're putting their money 100%. And saying why are they're betting that this stock is going to go up. Why? Because it's evident by what they're willing to pay for futures.
And I want to talk about mortgage applications, refinance applications. They did go up this week.
Okay.
Purchase applications have gone down a little bit, probably because of Thanksgiving and the holidays. My rates right now are still hovering between 2.75 to 3%, even though it did uptick just a bit.
That's a great rate. Hey, Dan, I want to say you did a really good job, man. Good job. That's right.
Yay!
I'm trying,
Dan's
guys.
the winner. Dan's the winner.
I'm trying, guys.
All right, guys. I just want to say, hey, thanks so much for tuning in to the show. Until next week, Wednesday at 2 p.m. Brett, do you want to plug in anything? Any final words?
No. Buy Bitcoin.
Buy Bitcoin.
Buy Bitcoin, baby.
There you go.
And Litecoin.
That's that your next you should get a Bitcoin tattoo, man.
Dude, I was gonna wear a Do You Even Bitcoin Bro shirt that I have.
Dan, and where can we find you on your website?
VegasLoanGuru.com. You can go there, fill out the application, about 20 minutes. I'm also on YouTube. You can check me out at Dan French. Guys, refinance your homes right now. Look at that mortgage reevaluation.
Guys, thank you so much for tuning into the Las Vegas Real Estate Show. If you guys have any questions, feel free to send us an email. Don't forget to visit lvhomeexperts.com. Until next time, you guys have a great day. And also, happy Thanksgiving.